Okay, so this workshop is about trading plans, but not only that. At any time, if you guys have any questions, I would like you to comment that in the chat. I will, of course, straight away answer your question or at the quickest and most possible convenience. If you have any questions, just shoot it in the chat. I've muted everyone because it's Sunday. I don't want to waste too much of your time because obviously, like I said, it's Sunday. We've got some people from the east of the world where it's well, pretty much night there, almost midnight. And then we have people who are just starting their day out from the west, and I'm pretty sure you guys get other things to do as well. But like I just said to Humphrey, it's awesome dedication. That's what really makes us win. Because most people, even when, let me just explain it very quickly, because I'm going to be speaking about plans, and I'm not only speaking about trading plans, I'm actually speaking about real life plans as well. So when life is organized, it works a lot more smoother. So I'm going to explain this right now quickly. I've released a little quote here. I know the image is not that good, but it pretty much says, today a reader, tomorrow a millionaire, or today a grinder, tomorrow a millionaire. This is me. I'm involved in trading since 2007. I've worked in the markets directly in different roles, ranging from sales to actual management, to trainer, to trader, head of fund management. I've trained over 2,000 people to work or trade in the markets, and that's a fact. I'm not making anything of this up. I've managed a couple of different brokers in Cyprus, so European regulated brokers. I love helping others. I've held plenty of free seminars where I would or a paid seminar where I would give all the money out to charities for either children or, let's say, animals, dog shelters and things like this. I've created our trading systems, and they've been extremely successful. Alex has a question. Okay, Alex, I would prefer giving you an example of moving that into profit, but let me unmute you and you can ask me. Do you prefer if I unmute you and then you can ask me the question directly? Here, I've unmuted you.
Oh, okay. Can you hear me?
Are you there, Alex?
Oh, no.
I think I'm having some problem with my microphone. Okay, good. Well, what would you like to ask, Alex? And they've turned into losses, I suppose, right? Okay, so I'm going to explain you this. Just remind me, as soon as I'm done with the workshop, I'm going to turn on the trading platform and show you live examples. But listen, you remember that trading challenge, that 90-day traders challenge that I've been asking consultation from you? It's actually being pretty, I want to start it hopefully by the end of April. Something like this. So in the next month, I would like to begin it. And that would really help, because that's 90 days of pure training, real training, no random stuff, everything deliberate. Guys, I'm going to quickly go over the structure of today's webinar. I'd like to just pinpoint this quote at the bottom where it says, love what you do it with passion, hard work, and never give up. Success and happiness will come to you. This quote is extremely important to me. I've had it written at every single station or desk where I worked in the last 7 years. It's helped me a lot, because I always remembered that if I loved what I did, I would obviously service people better. I would be more careful of mistakes. If I did it with passion, I would be better than everyone else in the room, and that's a very important thing to me. I like to be I like to be better at what I do than anybody else. I work like I'm in second place. I trade like I'm in second place. Last year, from overworking, I think I got a little bit sick. I destroyed my thyroid a little bit, so it became a hyperactive thyroid, which caused me to lose kilos. I would forget things, and I just wasn't well. But anyway, all of those mistakes from last year have helped me, and in the last 3 months have been extremely, extremely good. I also remember never to give up. This quote reminds me pretty much simply to love what I'm doing, to do it with passion, and of course, never to give up. And I can promise you, just last year in 2016, I made over 400,000 just from trading. I have real statements of this, and of course, I'm going to show them to everyone. But the people that have been in this room for long enough, for example, like Alex, sees, of course, the results that are being generated. Now, I'm going to go over the structure. One, I'm going to be talking about what makes a good trader, just to give you guys a pinpoint of some basic stuff. Two, I'm going to go over what is a trading plan. Three, I'm going to give you my checklist. What is my checklist? Four, I'm going to go over how to keep emotions out of the trading station and in their place where they're supposed to be, and that's outside of your room, your station, far, far away from you when you're trading. Five, I'm going to go over the beauty of simplicity and the KIS principle of keeping it simple. And then we're going to go to a bonus point, which is a plan to trade and live by. A very nice plan that can help you guys quite a bit in whatever you're doing. Okay, so what makes a good trader? Now, being a successful trader, I believe, is absolutely the same like let's say excelling in trading is absolutely the same thing like excelling in anything else you do. Just a second, I need to invite Kato. Okay, Kato's on his way. So being a successful trader has absolutely no difference between being successful in anything else you do, whether that's sales, whether that's, I don't know, the car industry or whatever you're doing, whatever you guys do for a living. I can tell you that the same principles of success apply to everything, and that's work very hard, work extremely hard, have some kind of plan of what you're doing, have definite goals. Well, there's so much things that I can put in here, but the thing that summarizes everyone here is the mindset. Hey, Kato, welcome. Everybody's muted. So what I'm gonna, the workshop is recorded. You missed about 6 minutes. I started it a bit earlier. I'm sorry. So you can see the first 4 or 5 minutes as soon as the recording is up. You guys can comment, of course. Any questions, ideas, or concerns can be put in the chat box. Or if you want to be unmuted, just let me know and I'll unmute you. I'm talking about what makes a good trader. What makes a good trader, in my personal opinion, like I said, is just like anything else in life. I've become really good at what I do. I've earned a very good reputation in the markets. Brokers still call me up and ask me to work for them because of the success I achieved. Now, the way I achieved success in business is because I cared for other people more than myself. I realized that if I can help them, eventually that's going to come back to me. And I knew that. And that's how it worked. That's how I won Employee of the Year at a very reputable broker, a very big broker. And that's the same year I came there, I, earned 3 different promotions and 1 Employee of the Year. I'll send you guys a picture in the room so you can see the little, what's it called, glass thing that they gave me. Anyway, I'm going to go over 5 points here. The first one is a system. You need to have an easy to understand system. So if your system is too complicated, or you're trying new things out constantly without giving one thing a go, I can promise you, you don't understand how that system actually functions. You can't just have a system overnight. A system takes time to build. Things have to be tested. Things have to be used in different scenarios. So, like it says there, it's an easy to understand and use trading system. That's what successful traders have. They can explain their trading system to a 6-year-old kid, and the kid will understand how it works. So if you can't explain to a 6 or a 10-year-old kid why you open positions, then your system is probably too complicated. Point number 2 is the mental side. And I believe that every single successful trader shares the right mindset. Just like every billionaire has that specific mindset. And if you speak to a billionaire, you'll be like, oh my God, this guy's so smart. But they just developed this mindset. Three-quarters of billionaires are actually self-made. And actually, well, they're all self-made, but 3/4 of billionaires came from nothing, from scratch. And I can name plenty of them. Plenty of billionaires came from scratch. For example, Andrew Carnegie, he was a railroad magnate, one of the richest person in his day. Poor. Grown up by himself, became a billionaire. How? The right mindset. He built that mindset of a winner. So you need to have the right mindset. This mindset needs to be, like it says there as well, one of the main skills of this mindset is discipline, and I'm going to be speaking about this today. So you need to have an easy to understand system, but you also need to have that mindset of a winner, because a mindset of a winner, he knows where he's going. A winner has risk management, he's got goals, and goddamn, he's got confidence. So the goals part, he has definite goals. He knows why he's here. He's not here for fun. He doesn't care about opening 200 trades a day. He's here to make money. It's very simple. He's here to make a living out of it or achieve some specific goal, like $1 million a year or 5 million or whatever. But I know plenty of people who earn a very good living from trading. And believe me, they all have that mindset of a winner. Now, the mindset of a winner, I'm actually going to create a workshop that's going to be based on mindsets. I'm just thinking either to do it on Tuesday or Wednesday. I'm going to see how the calendar looks like, and I'm going to explain that there. But the mental side of things needs to be very clear to you. Now, it takes a long time to change the habits we have to understand how money works and things like this, because from a child, we're all taught the wrong way. Because most of us probably we're not born in millionaire or let's say entrepreneurs' homes, people who are earning millions of dollars a year. So the reason that there are so many people who are either poor, broke and poor is two different things, poor, broke, living on the edge, average, rich, and extremely rich, there is the last two things I said, there is not too many of them, because that mindset takes time to build. For example, being an entrepreneur, which if you guys are traders, that's exactly what you are, because trading is a business, requires a shit ton, and I'm sorry for swearing, many failures before you become a winner. And I can promise you in anything you do, that stays the same. The reason, for example, I'm going to give you a quick story. When I won Employee of the Year, and I've done that at 24 Option, I've worked there in the management. Well, I started out not as a manager, and I kicked ass. And of course, the reason I went there is because I had free opportunities to quit that job. I had free opportunities to leave from there because something just didn't go my way. For example, I did something really good, and the manager, then my manager, took credit for it without even doing anything for it. And I got really upset, and I wanted to say this and say that, but I realized, you know what, let me just shut up, because it's clear that I'm better than him. And I said to myself, in 3 months, I'll have his job. And I worked so hard helping others without thinking about my gain that I think the next month and a half, he was fired and I was put in his place. That's because he was taking shortcuts. Now, I'm going to tell you guys, there are no shortcuts in business, in trading especially. Successful trading is a long and lonely road. And the fewer shortcuts you take, the less greed you put into it, the more you understand the process of winning. And it's a long process. It's not easy. If you're looking for the easy way, I promise you, you're not gonna find it here. So I'm gonna stop speaking about mental stuff, but to summarize the mental side, I can tell you that, and I say this all the time, successful traders share only two things. They share losses, a lot of losses, and number two, they share their mindset. Let's go over to point number 3. What makes a good trader? Risk management. Risk management. I can say it a dozen times, and I still won't be able to explain the importance of it. People forget this. If somebody loses 50% of their account, I promise you, they have no risk management. And let me tell you something very quickly, how math works. If you lose 50% of your account, you know how much you need to earn back to be back at the same point? 100%. Not 50%, because if you have $100 and you lose 50, you now have to make an extra 50, which is that's 100% of the current 50. So it's even harder, you see. Now, if you guys don't have a risk management plan, don't worry, we're going to be talking about this as well today, and I'm going to be giving you guys the checklist I have. We're going to be speaking about mine, and then we're going to turn your mics on and see how we can improve your checklists, and if you guys have any. So let's emphasize the importance of risk management. Let me give you a quick example. Let's say we have John. I'm going to give you a story. John has $10,000 in his account, and John really thinks he's a good trader, just like we all do. And John opens a one-lot trade, and it goes in his favor, and he wins. And he's like, yeah, that's good. Another lot and another lot. And John has 10 wins in a row. John uses no stop loss. And the reason he has 10 wins in a row is because price moved out of the way. He was in negative for 3 days, and on the 4th day, it went into profit, and he closed it with a smaller gain than his actual unrealized loss was. So John thinks that this is fine, and he thinks that he can keep doing that consistently. He thinks that he can outstand the markets. So the markets are going to go by, and he will never be stopped out, and he'll end up winning. Well, the 11th time John does this, so he has a 100% win ratio. He does it one time, and he loses that one trade, and it doesn't go 100 pips this time, it goes 300 pips against him. John is stopped out because margin call kicks in and he has about $150 left in his account. You see, John has a 90% win ratio, more than 90, 92.5 win ratio, and only 7.5 loss. But he has much more losses in actual realized capital than wins. So forget about this crap of winning 80% of the time. It's done. I do it many times and people here see this. But it doesn't really make you money, because if your losses are bigger than your profits, eventually you're going to die out. That's why risk management is here. Risk management is for you to set a certain stop loss on every trade. Now, I can give you the best advice right now. That's not a definite stop loss. That doesn't mean every single trade you're opening, it's 1% risk. Some trades should be 0.5. Some trades should be 1.5. So you see, you balance the risk out. You balance the risk out. That way, when you're more sure on a trade, even though those won't always work out, you'll be able to make a bit more money. Let's go to 4. Goals. What makes a good trader? Good trader has goals. He has definite goals. And I promise you, this is the only way to success in any kind of endeavor. You don't need daily goals. Forget about daily goals. You can change a day. But what you can have control of is a week. More specifically, you can control a month. So goals are a part of me. I know that if I'm trading without goals, I'm probably trading randomly. I do not know how much I'm going to make. I do not know what my withdrawal will be. So I, as a person, need to withdraw about 6K every month. That's how much I need for living expenses, for my rents, for my dogs, for my food, for my kids' school, for car expenses, these expenses. I need about 6K a month. That's what I need just to pay off those things. Forget about having a beer with my friends or taking my wife out to dinner or buying her a dress or something. So no sweets, no cake, no nothing. If I make 6K in 1 month, that's not enough. It's not enough whatsoever. So I know this is what I do. I aim above the mark, so I hit the mark. So my goal every month is 7.5K. That's how much my goal is. But even if I come to 7, I'm still happy. 6.5, I'm still happy. Because some months I make 15K, some months I make 20K, some months I make 4K. But I aim above the mark to hit the mark. If you know what I mean. So if I ask you guys to raise your hand right now, if one of you does it, you'll understand what I mean. If you raise your hand upwards as much as you can, do it as much as you can, push, and stay. That's as high as you can. And I tell you, just push a little bit more. And you can do it. You can raise it that little bit more. So that's what I mean. I set lofty goals. Goals that are not impossible for me to reach, but I need to stretch just a little bit more to reach them. I'm constantly reminded of my goals. I have them written everywhere. And if you guys follow any of these 5 steps, I promise you'll be able to improve drastically as a trader, but you need to take this stuff seriously. We're going to point number 5 and we're going to the next slide. Point number 5 is confidence. Confidence in having, if I may say, we're all men here, balls. You need to be able to cut a trade when you're wrong. Let's say I'm so sure that Euro USD is going to go up and I open a trade, 10 lots, buy, and it doesn't go in my favor, it starts going against me. I need to know that I'm wrong. I need to have that confidence in me to say, it's okay, I'll close this out. Even if it turns around, I won't care about it, I'll find a better trade. Confidence comes from knowing what you're doing. That's where confidence comes from. Confidence doesn't come from ego, doesn't come from how strong you are or how smart you are. It comes from knowing what you're doing. Your IQ has nothing to do with trading. Anyway, let's go to the next point. So we're here. What is a trading plan? To me, a trading is a business. So a trading plan is literally the same thing like a business plan. It should literally cover every aspect of your trading, such as your trading system and everything else that's part of it. I'm going to give you some points here. 1, what will you be trading? So which assets? You cannot just say, I'm going to trade everything that moves. That's stupid, because then you won't be able to manage everything. For example, you need to have a proper system of analysis, and we're going to be doing a workshop on this as well. As you see, it's Sunday, and I'm starting to be very active again. So we're going to be doing a workshop on how to actually analyze pairs. And I'm going to teach you using NLP, which is neuro-linguistic programming, how to actually, and my technical analysis on how to actually analyze trades properly, find the right markets. So by run, I mean, what are you going to trade? For example, I trade Forex in the season commodities. Rarely do I touch stocks. I only touch stocks that are, well, let's say, unstable. So if Alibaba starts dropping drastically, I'm going to put my attention to it. I'm not going to start trading it. I'm going to bring my attention to it. So what do you trade? You need to know what you're trading. Forex, what Forex? Majors, what? Minors, exotics. You need to have that clearly defined in your mind. And the next time you see something on Forex Factory or here or there, some guy trading some pair, you don't just rush into it and say, oh yeah, he's right, it's going down and I'm going to take it. You do thorough analysis. But we'll come to this. Point number 2 is how you enter, manage, and exit trades. This has to be yours. You have to pick it up from everywhere and through experience, create it better. So 1 is what you're going to be trading. 2 is how will you enter, manage, and exit trades. This is very important. Your entry system is so important that without it, you wouldn't have any good trades. Your management system, God, that's even more important because after you enter a trade, you need to know what the hell you're doing. And finally, you come to the exit part. That's your take profit part or stop loss part. You don't have to have set take profits, but I fully advise you to have set stop losses. That means every single position you open, you have a stop loss. Point number 3 is what strategy and research will you apply? So that's basically your trading system and way of analysis. How will you analyze pairs? For example, I go from the weekly or monthly chart, I check everything out, then I go back. Let's go there daily, 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 daily. Then go 4 hours, 4 hours, 1 hour. You check it all up. What is there? The chart's always telling you a story, and you can make a shit ton of money on these stories, so you need to find it. 5 is your financial goals. A trading plan should revolve around goals. So these goals change as time goes by, as money is made and as money is lost. So, and of course, as your skills increase or decrease. So you can say, I want to be a millionaire this year. Sure, it's very good to have such good motivation because your goals are actually your motivation. So you want to make $1 million from trading in 12 months? You can. But I promise you, you're going to have to do what 95% of the traders aren't doing. In fact, I'm going to give you something better right now. You're going to have to well, look, when achieving your goal is more important than partying or going out or watching a movie, then I can promise you, well, somebody's going to tell you, welcome to the 1% club. That's how this works. Okay, so when your goals are more important to you than resting, or when your goals are more important to you than playing football or watching the new movie or watching that new show or whatever. I don't know what examples I can give. Well, I promise you, if you keep that up, you're gonna make a lot of money. A lot of money. And of course, you're gonna achieve other goals. And the final point of what is a trading plan, a journal. So I'm gonna go over the points again. What are you gonna be trading? It's important to know what you're doing. 2, how will you enter, manage, and exit your trades? This is your trading plan, the actual trading plan. 3, what strategy will you apply to the markets and how will you be researching your trades? What risks, number 4, what risks will you take on each trade and overall trades? What I mean by this is, for example, on overall trades, I will take a maximum risk of 3%. That means I cannot exceed 3% on any or all given trades. And per trade, I'll say 1%. But I like to have it split up a little bit. So we have risk 1, that's my smallest risk, which will be 0.2%. My risk 2, this will be my medium risk, that will be 0.7. And finally, my aggressive risk, that will be 1.5%, for example. So you can, break it up a little bit. Now we're coming to, yes, Alex, I can definitely recommend you Forex Journal. But I will after this. Okay, guys, so this is my checklist. Now, I need to tell you that my trading plan, which is my checklist, has been tweaked and changed a lot across the years. I apply a word called Kaizen, which kind of means constant and never-ending improvement. So I like improvement. It's a huge part of my life. I've changed a lot the way I think, the way I do things. I've made a ton of mistakes by doing this, but I can surely say on each birthday that I'm twice the man I was last year, and I kind of have a ritual of doing this. So yeah, improvement is really important with whatever you're doing. Anyway, my checklist is basic. I like to keep things simple. First, analysis must be done before any kind of trade is open. I don't care what's going on, analysis has to be done. What I mean by this is general analysis. What I mean by general analysis is thorough analysis, comprehensive analysis. Literally check out the pair so well that you understand it off by heart, but you keep doing it. You keep doing it just like that girlfriend you don't trust or something like this. You're always on the lookout on what's going on. I try to give examples, to make people laugh. Sometimes they don't work out. But anyway, general analysis, comprehensive, I should have written, comprehensive analysis. Now, while you're doing this, you also check the whole week of what possible risks and opportunities can arise. What I mean by this is, I'm going to open a trade on gold buy, but what are the possible risks that I encounter in my trade in gold going down? For example, some kind of agreement is reached between the UK and Euro. Tensions go down in Syria, or tensions go down between Russia and the US. Things like this can push gold significantly lower, and that can really draw me out. What are my opportunities? A terrorist attack, right? A terrorist attack is going to push prices much higher of gold. So this is, let's say, in my favor, even though I don't want that. Don't think that I want that, but I'm just saying, giving you an example. So an analysis is always done. I never enter a trade based on a hunch or some kind of advice. Even if I'm opening a trade, guys, I fully advise you to check it out before you enter anything. Don't just jump in, analyze it. Oh, so anyway, here, as you guys see, it's wrong. So it's 1, 2, 3, 4, 5, not 4 points. 2 is system checkup, preparation of the system and analyzation of the system. What I mean by this is every Sunday and every Monday, I kind of look over my system. I see how it works. I go over the the MPIs and all of these things. So I, of course, go over my system on and on and on, so I don't forget anything. Or so it's a little checklist of what I need to check before I enter a trade. So it's a separate checklist to this, but I'm going to show you. One sec, we made a mistake. Okay, here we are. Point number 3 is the assets I'm going to be trading on that specific day and how I will trade them. This is basically a clear list, and follow-up analysis is always done on every single one of these pairs that I'm going to be trading. So first is analysis general of the whole market, what's going on, specific trades. Then is my system checkup. Then the actual assets before I trade them. So today, I'm already going to know what I'm going to be trading Monday, Tuesday, Wednesday, Thursday, Friday. I see that. Of course, opportunities might arise here and there, but I'm always on the lookout for them. But I like to keep things organized, because if I know what I'm going to be trading, I get to prepare for it much more in advance than just opening my trading station tomorrow and saying, oh, look, Euro USD might go up, and I go buy, and that's random trading. No preparation in that. Point number 4 is, again, this is my checklist, the risk management I will be applying. Of course, like I said, some trades I open bigger risks, some trades smaller risks. I don't open the same risk on every trade. Some trade is 2 lots, another trade is 1.2 lots, and another trade is 10 lots. For example, oil on Friday was 30 lots. I was shooting for 51, and it came to 51. So the risk management I'm going to be applying, and 4, my goals. This week, this month, and this quarter. This is literally my motivation. And what I use something called future pacing. So it's like imagining the future. So I see myself achieving these goals. I future pace myself through the week. How is this week going to work out? How am I going to do on the NFP? Am I going to win the 8th in a row? Because you guys know, for example, Kato, I'm sure you know that this is 8 in a row of money made on the NFP. We didn't predict the numbers every time, but we made money 8 times in a row. It would have been 9, but I didn't trade that one NFP because I was quite sick. Anyway, so this is my checklist. Simple, 5 points. That's what I do every day, and yeah. So that's how I enter my trades. It's a bit more complicated than this, but I try to make it as simple as I can. Are you guys following this? Is it interesting? Okay, I'm going to continue until. Okay, thanks, Alex. Okay, so we're going to be here, and this is keeping emotions in their place. I'm going to speak about this for a little longer, and I hope it's gonna work out a bit better. So keeping emotions out of trading is, well, like it says there, a sure way to success. In my many years in the brokerage business, I've seen the reasons most traders lose, and I can tell you, emotion is a major part of these losses. I've seen people add on to losing trades. For example, I've seen a managed account recently, and I was shocked that this person keeps opening and opening and opening trades as price goes in their own direction. Now, we've all done that before. I'm pretty sure you guys do, but that's a beginner's mistake. I've got 3 tips here to help you not go wild on your emotions. First, when something bad happens or something good happens, do not react right away. Take a breath, relax. You must be the master of your emotions if you wish to be a winner in the marketplace. It's as simple as that. You need to be in control, not your subconscious mind, your conscious mind, and that's you. You're in control, you're the boss, you make the decisions. So point number 2 is you need to see the bigger picture. For example, I use NLP to future pace and see how bad things could get if I let my emotions take control of me. So what I would do is just close my eyes and just imagine myself sitting on the trading station, my trading station, and I would see something bad happen. Something bad, or I would be in a tough position, and I would program myself to react better to this position. Now, I know most people won't do this because it kind of sounds crazy, but it's something like meditation, but it's called active meditation. That means you're in control of what's going on. So think of it like this. Every aspect of your life would run smoother if there is a plan compared to when things are handled on the fly, for example. So your life, your trading would be so much easier if there is a plan for the bad situations, for the good situations. So just imagine this. Imagine a football team with no manager, with no plan. Now imagine their success of scoring a goal, for example. Their success of scoring a goal is much smaller, but their success, the unsuccess of receiving goals is huge. They're going to keep receiving goals like crazy. Anyway, point number 3 is know that you're in control. You can be in control. Let the other things not control you. But when you're trading, you need to have full control. You need to be the boss. I don't know, write a little sticker and stick it in front of the wall, or down on your computer, say, I'm the boss. Or who's the boss? And then just keep answering it mentally. Me. I know it sounds silly, but this stuff works. Before I went into trading, I was studying psychology a lot. I haven't finished any kind of school, high school. I have no degrees or diplomas. Since 12 years old, I've been grinding and working my ass off. Everything I know, I learned from myself. Nobody taught me anything. And I can tell you that the mental side of things has a huge difference. I have friends of mine who finished some very good universities and colleges in the UK, and they were employed by me, a guy who never even finished high school. So it's not about school. It's not about what you know. It's about how you apply things. Forget about knowledge. Knowledge is extremely important, but forget about the things you have in your mind that you, well, anyway, let's not talk about this now. Let me go over the trading plan. So we're done with this. A trading plan is important not only to trade actively, but to completely take control of your trading plan. Now, while trading discipline doesn't assure success, I promise you that it improves your chances. So like I said, in many ways, a trading plan is a business plan. Now, it definitely should outline what you're trying to accomplish and how you're going to accomplish it. Every trading plan is, of course, very different from the other one. Some are similar, some are quite different, some are 2 worlds apart. So there isn't a template that I can give you. But I've told you that, one second. It switched off. My screen sharing went off, 1 sec. Okay. So I can tell you that there isn't a template for every kind of trading plan, but this is what it consists of. These are the things that are in there. This is my checklist. This is my checklist before I trade, before I enter trade. It's stuck on my wall. I have it in my wallet, and many times, well, I actually have it in my laptop bag as well. It's everywhere. I need this. I want to see it. And this is a trading plan. I've explained this already. So we went over keeping emotions into play. I'm going to give you guys a couple of, a plan basically to live and trade by. So these are a couple of points. You guys can screenshot them, but they're going to be on our Facebook and Twitter after the session is done. So if your trade moves against you, these are just a couple of tips. Don't make a big deal about it. Either you cut your losses short or you let your stop loss do its job. It's very simple. If you have a red trade, you need to make a decision. You're either closing it out or letting your stop loss do its job. You never remove or move your stop loss. You employed your stop loss to do its job and you're paying it a certain amount of money. You better pay it as less as possible. Be a smart businessman, not a silly guy that's giving his money away. 2, no matter what happens, the market does not owe you a single thing. The only one to blame is yourself, so either get better or shut up. 3, the market doesn't know and doesn't care about your current situation, how much money you need, your goals, or how bad things are, or your health, and things like this. The market's going where it's going. You can either follow it and make money, trade against it, and maybe make money, but you don't have many options. It's either be there or not be there. Point number 4, right? 4. The market can remain abnormal a lot longer than your capital can hold out. This is the example I gave with John. So the example is pretty basic. The market can go in a different direction a lot longer than your capital can hold out. So use stop losses or definitely use stop losses and also get out of your trade as soon as possible. 5, when in doubt, wait out, or if you're in, then get the hell out. In other words, if you're not sure what you're going to trade, don't trade. And if you're in the trade, then get out if you're unsure. 6, don't let unrealized gains become realized losses. You use all available tools to manage risk, and one of those tools is stop losses. For example, moving your stop loss into profit. But I'm going to explain this. Alex wanted to know about this. Going on to the next point, capital, of course, fund management and limiting your losses are of paramount importance. If nobody knows what the word paramount means, it means of utmost importance, more important than anything else. Before last point is define your profit and loss targets before you establish a position. More specifically, your exit strategy. So define your exit strategy before you enter a trade. So this is going to be a part of our live trading rooms now. I'm going to be defining the actual trading strategy and how it's going, the trade strategy. What I'm going to trade, why am I trading this, how long I'm going to be in the trade. So the live room is getting improved continuously. And the last point is have a methodology for determining how much risk you're willing to take on each trade. So it's pretty basic, guys. Pretty basic. I think I've explained a lot of things. I'm going to go into questions now. Does anybody have any questions? I suppose you guys don't have any questions. We've been going only for about half an hour, so we have a bit more time. We have a bit more time. Yes, Alex, ask your question. Yes, Kato, I will give the example right now. I will give you the example right now. So just a second. Oh, I don't have it in Word, but I have it in writing in front of me. Just 1 second. Were you here when I went over this? What is a trading plan? Okay, so I'm going to explain it. I'm going to go over. 1 second. I need to think how I'm going to do this. So this is my checklist. Yeah, I'm going to give you an example. I'm going to give you an example in a minute. Just give me a moment and I'll give you an example. I'll read out my one. Alex, it all depends on the actual trade, to answer your question. It all depends on the actual trade that you're in. What kind, for example, if there's quite a bit of stagnation, if you're unsure of the trade, then yes, you should be moving your stop loss into profit. Not every time, but it's a good way of securing trades. I know you're going to be sometimes you're going to close out like I did on GBP USD. I was in profit 40 pips. I moved my stop loss to 10 pips, and it went back, and I only made 10 pips instead of 40. It varies in the trade. You can't just take a trade. You can't base it on all trades. Every single trade is unique because the market conditions are never the same. That's why the market is always the same, because it's never the same. It's always evolving. But you should start doing that a lot more. As soon as you go into a profit of 10, 15 pips, start moving your stop loss into profit. I recommend that for everyone who's trying to create a trading system. It's a very good way of protecting your profits. You guys see the eagle and all about the trading plan? Okay. So, like I said, Kato, many trading plans are different from other people's. What I would like to do today is, well, from today, is start contacting everyone and kind of create with everyone their own trading plan. So I would like to ask you first, are you free for a quick call, maybe 20 minutes, just so I can help you out with the trading plan and give you my example, ask you a couple of questions and see how we could create your trading plan? So I don't go over general stuff like I just did. I would prefer to do it personally with everyone and just explain exactly how my trading plan is and what I do with, of course, create your trading plan. Would you be free, Kato? Or would you prefer tomorrow? Kato, are you there? Yes, in 1 hour is fine. In 1 hour is fine. That's 8:30 Cyprus local time. That'll be fine. Okay, Alex, when are you free, Alex? Are you free later today? In about an hour and a half or two? I'm actually going to message everyone personally as soon as we finish the session and see when we can have our own private calls and I can help everyone. Today and tomorrow, guys, is also Trading Concierge days. We have a new month. I'm going to be doing that Trading Concierge with you guys to go over your accounts, create you the risk management things. That will be involved in the trading plan, so it's kind of the same thing. But we have to do this today and tomorrow. I will not be able to do it on Tuesday, Wednesday, Thursday. You would have to wait for the next week because Tuesday till Friday, I'm busy trading and doing the live rooms and workshops. Okay, I want to just remind you guys that you should always remain realistic. Some of the prime benefits of a trading plan is that it allows you to realistically evaluate your trades. That's fine, Alex. Monday is fine. To be a successful trader, guys, you need to establish reasonable expectations of risk and reward. Okay? So if I can explain it like this, let me just find where I've written it. Oh man, where is it? 1 second, I've written this somewhere. It's here. So, okay, so let me explain loss cutting very quickly. I totally forgot about this. Trading has this amazing historical footnote. So if you study great traders throughout all of history, from W.D. Gann to J.P. Morgan to whatever, they all share the same statement as their #1 rule. Cut your losses quickly. Capital preservation keeps you in this game. It is especially important once you understand the math. Let me explain to you guys the math and how this works. If you lose 25% of your account, you need to make 33% back. You guys know that? You lose 25%, you need to earn 33% just to break even, not to be in a profit. So if you're 33% down, in reality, you need to make 50% back to get back to square one. Think about it. 33% negative is 50% of you getting back just to be at the same place. So think about it like this. If you lose 50% of your account, like I explained before, you need to earn back 100% to just get back even. Now, if any of you like sports, for example, I know Kato watches sports, football especially, he knows that a good defense creates a good offense. And anybody who watches basketball also understands that defenses win championship. The same goes for stock trading, Forex trading, commodity trading, whatever trading. Traders need to focus on defense a little bit more than offense. Now, even Warren Buffett understands this, and he tells us very simply, the first rule of investing is don't lose money. The second rule of investing is do not forget about rule number 1. So if a billionaire, one of the richest men in the world, tells you this, I think it's kind of important to to preserve your capital, not go crazy. So if somebody who's where you want to be is doing something, then just focus on what they're doing. So let's go over confidence a little bit more. The last point we spoke about was confidence. There is nothing worse than seeing a great opportunity, but not having the courage to pull that trigger and execute that trade. Now, freezing up due to this fear does not happen to great traders. These guys, they have that mental process. They understand what they're doing. They're not scared because they have proper risk management plans. They know what they're going to do if the trade goes in their way, but more importantly, they know what they're going to do if the trade goes against them. This is a trading plan. That's what a trading plan is. You know what you're doing. Very simple. That's a real trading plan. So you have a plan for what you're going to do when the trade goes well, but you also have a plan when the trade goes bad. It's very simple. Confidence cannot be taught. It comes from making real decisions, taking action, and learning from experience. I can't teach you confidence. I can motivate you to have it, but you get it yourself. So yeah, that's pretty much it. That's all I want to talk about today. I'm going to be creating an analysis video because I can't do it with everyone like this. I'm going to be creating a proper analysis video. It's going to be out in the next, after my call with Kato. So in about 2 hours time, we're going to have the analysis video for this week. Alex, let's arrange an appointment for tomorrow. Comfort the same. Kai, I don't think we know Kai. It's Kai Wang. We had Kai Whale in here before. Kai, if you're interested in checking out the live trading room, just let us know. And if you have any questions, they're very welcome. That's pretty much it, guys. That's pretty much it. Thank you very much for coming. I wish you all a very good night. Yep. Okay, that would be fine. Thanks, guys. Thank you for your time. Enjoy your Sunday. Love you all. And Kato, speak to you soon. Everyone else, I'll talk to you tomorrow morning. I'll message you. Good night. Bye.